It was delayed, but it was still an inflation report, and it still showed that prices rose last month at the fastest pace since January. The headline CPI came in at 3%. It's lighter than economists had expected, which the White House then trumpeted, yet it's still up from 2.9, and it is 30% more than the 2% target. Even so, even with this higher number, the Fed is expected to lower rates by 25 basis points next week. The chair, Powell, has a lot to consider going forward. Inflation's up. The president, tariffs could push it even higher. The labour market, however, is softening. So with that, the Nobel-Prize winning economist Paul Krugman is with me. Paul, it is good to see you, sir. I'm grateful. I suppose the technical question is whether a rate cut is warranted when you have inflation at this level, but unemployment being so difficult.
Yeah, it is the economy, I think the technical term for it is it's weird. The headline unemployment rate is not particularly high. It would be very interesting to know what the latest jobs report would have been if we were getting it, but we're kind of in the dark. Inflation is elevated. It's ordinarily you would say, well, probably maybe not cut rates. But on the other hand, there's a lot of reasons to think that the job market is worse than the number suggests. Not a lot of people have been laid off, but jobs are apparently, according to all indications, very hard to find. So what would you do? And I think at this point, the Fed is going to cut by a quarter point just because if it didn't, people would totally panic. So they're kind of locked in psychologically to deliver what people expect. But it's by no means a slam dunk case.
Right, but do you think that the idea of a 2% inflation target, even over the long term, is now just a fiction, since clearly the Fed's de facto is accepting a target inflation of 3%?
I'm not sure that they really are. I think that they are trying to get a bit ahead of the curve. Lots of people think that they should have raised rates in 2021, even though inflation wasn't very high yet, but they should have seen it coming. So, you don't want to wait until you exactly hit your target and then hit the gas. You don't want to react too suddenly, and you do want to try and get ahead of the curve. But of course, it's very hard to get ahead of the curve when you can't see the curve because they're not getting any data. So I am really glad not to have Jay Powell's job right now.
Yeah, he can't win. Whatever he's going to do, he's going to be attacked by one side or the other, and probably both. But this failure to have data. Yes, there is a certain amount of private economist data which can fill the gap to a certain extent. Can you recall a time when we've had such a lack of visibility across what's happening at the economy at such a crucial time?
No, I don't think there's ever been an interruption in the flow of data from the Bureau of Labor Statistics. This is who would want to cut that? And yet there we are. And we're learning very much the limitations of private surveys. They are invaluable. We always want the private surveys, if nothing else, to keep the public ones honest. But they don't have the resources. No private firm is going to go out there and look at a sample of 60,000 companies, right? It's just not. This is we never and it's not a time of calm either. If nothing much was happening in the economy, then all right, we can probably assume that things haven't changed very much. But when we have just this morning, suddenly threats of we're canceling trade negotiations with Canada because they dared to quote Ronald Reagan. In this kind of environment, you really want some data so that you know what's happening.
I'm glad you talked about that. Stay with me for 1 second, Paul. We're coming back to you in a minute because I want to pick up the strand of what you've just said. The Reagan Library, on that point, says the Ontario ad misrepresents the speech by Ronald Reagan. Both he and President Trump used tariffs, but the approaches were very different. Donald Trump's case, unilaterally blanket tariffs on trading partners, every one of them, China, Canada, the EU, and others. And he's using it as geopolitical, geoeconomic sense, whether it's Brazil or India, to put pressure. But Ronald Reagan's were very targeted. Japan on semiconductors, for example. And overall, he was absolutely free trade, which he said was an obligation of the United States. It was 1987, and this was his weekly radio address.
Imposing such tariffs or trade barriers and restrictions of any kind are steps that I am loath to take, and in a moment I'll mention the sound economic reasons for this, that over the long run such trade barriers hurt every American worker and consumer. But the Japanese semiconductors were a special case. We had clear evidence that Japanese companies were engaging in unfair trade practices that violated an agreement between Japan and the United States.
Paul, the allegation is that from Donald Trump that the way they used it was fake. The Reagan Library says they've misrepresented. I've got the transcript of the 87 address. It seems exactly on point. Ronald Reagan was using tariffs in a specific sense and specifically says if we don't do it, if we do general tariffs, things will get much worse.
That's right. No, I mean, the Reagan Library, I think, is a profiling cowardice here. They don't want to be accused of being anti-Trump or whatever, Hamas terrorist or something like that. But now clearly Reagan was in fact a free trader, except when he wasn't. He did impose some tariffs. He did some. But let me tell you, I can give you an anecdote. I was actually in the Reagan administration. I was sub-political level, but I actually served on the Council of Economic Advisors staff in 1982-83. And one thing that happened there was whenever somebody floated a proposal, if the guy from the U.S. Trade Representative's office said that would be illegal under our international agreements, and the Reagan administration did not tear up international agreements. It did not violate promises that it had made to the rest of the world. Everything Trump has done on tariffs is a violation of our international agreements. So to claim that there's any similarity between Reagan and Trump on this is just totally wrong.
Paul, I need you to help me because during the course of the week, we've had the arguments on both sides of the tariffs on Questmead's business. Earlier in the week, we had an eminent economist saying, look, they are going to hurt, they're going to be bad, they're going to be awful. And yesterday we had Oren Casson saying, no, they are the right way to rebalance trade. It's happening a little bit longer than it happens, but manufacturing is coming back to the United States. It's left me this Friday puzzled. I don't know which is right now.
Oh, I mean, you can always find an economist, or to say whatever you want. But look, this is among economists that other economists take seriously. Can't think of a single one who supports what's happening here. I mean, and these are just there is no strategy here. I mean, in terms of manufacturing, it takes with one hand. Or gives with one hand, we're going to protect autos. On the other hand, we're going to put tariffs on steel and aluminum. And so it looks as if we've actually made the auto industry less competitive with these tariffs. And the sheer chaos, the fact that nobody knows what the tariff rates will be, even like next week, let alone over 5 years, is enormously destructive.
I'm grateful, Paul. Thank you so much. Have a good weekend, sir. You can find Paul's Substack at paulkrugman.com. It's paulkrugman.substack.com, and he updates it regularly with his latest thoughts on the US economy. It is essential reading, frankly. There you are. Essential reading for exactly what's happened. Look at that. Trump's Golden Ballroom and the fall of the American Republic.